Hey guys, Brown Asset Management here, and today I'm doing a review of Exxon, ticker symbol XOM, using my 6 simple steps. Stick around to the end of the video to see if I think Exxon is still a buy in 2021. Now let's have a quick look at the stock price over the last year. As you can see, at the start of the pandemic it was around about $61 a share, hit lows of $30 a share at the bottom of March. Bounced back since then to even get a highs of 52, but has been sort of on a decline to lows again around 32 in November, but has had a strong rebound since then, and even with the earnings. If we take it back to even 5 years, you can see that overall it's been decreasing slowly over the time, but the pandemic really caused a real jump. So the goal is to try and get this. Is it going to go back to that originally $70 a share pre-pandemic? That is the gamble, and we'll be willing to take, and I'll go through today. The market cap of Exxon is $192.8 billion. So now let's have a look at the 6 simple steps. Step 1 is the P ratio less than 20, and as you can see here, there is no P ratio at all because they haven't made any money due to the pandemic, so it is a fail as they do not have a P ratio. Now on to step number 2 is the revenue increasing over the last 5 years. So the revenue has gone from 200.63 billion to 181.5 billion, so that is a fail there. Their revenue has decreased. Now to look at step number 3 is profit increasing over the last 5 years, and the profit has gone from 8.38 billion to minus 23.25 billion. So that is obviously a massive fail there as the profit has decreased. If we look pre-pandemic, you can see that the profit was increasing over the last 4 years. It hit 14 billion, but has obviously took a sharp decline since then. Step number 4 is shares outstanding increasing for the last 5 years, and the shares have gone from 4.15 billion to 4.23 billion. So as a fail again, the shares have increased, meaning that the shareholders have been diluted. Not by much, but they still have been diluted. Just want to say thank you guys for watching the video. Please like if you've enjoyed it and give a comment on your thoughts, and consider subscribing if you enjoy stock review videos. I'll be releasing these twice a week, and my next stock analysis will be on Alibaba, so look forward to that and subscribe if you're interested. Step 5 is current assets greater than current liabilities. As you can see, the current assets of Exxon are 50 billion, whereas the current liabilities are 63.99 billion. So that's a fail there. They cannot pay off all their debts with their current assets. For step 6 is the free cash flow increasing over the last 5 years. I'm going to have to look at Yahoo Finance here, mostly because Interactive Brokers does not have the most up-to-date information. So the free cash flow has gone from 3.92 billion 5 years ago to minus 3.34 billion in today. So this is a fail again because the free cash flow has decreased. So that will be 0 passes and 6 fails, which is a first for the channel. If we take the most recent cash flow and find a price to free cash flow ratio, it is currently minus 56, as the market cap is 192 billion divided by minus 3.4 billion. So that is minus 56, which is, we can't really use that number. So if you believe Exxon is closer to their previous free cash flows, the price to average free cash flow, which is 192.8 billion divided by 9.24 billion, this gives us a price of average free cash flow of just over 20, which is actually very good, one of the lowest ones we've had. And this is good news if you think Exxon are going to continue what they were doing pre-pandemic. Now if we're just going to look at Exxon's dividend, which is a big thing that people look at because of its high dividend yield, as you can see it is 7.34%. It has an annual dividend of 3.48. The next dividend amount is 87 cents per share, and if you want to get this, you need to buy your shares before February 9th, so buy them now if you want to get them. The only problem with this is the dividend very exceeds their free cash flow, as obviously they have negative free cash flow, so their dividend is not safe. On the prior dividend, they were taking out debt to pay this, as they're very keen on getting that dividend paid out to their investors. This is not a safe dividend, but they haven't moved heaven and earth to get this paid. I will be looking forward to my Exxon dividend in March. Let's quickly have a look at some analyst ratings. The Refinitiv ratings have it as a hold with 9 buying, 14 holding and 5 selling, with the average target of $51.22. And tip ranks have it as a hold also, with 6 holding, 6 buying and 3 selling, with a target price of $52.11. And Simply Wall Street have it at a fair value of $44.23, which means it's currently 7.2% overvalued. This just has recently updated because when I checked this the other day, Simply Wall Street had it valued around $800. Now let's quickly summarize the 6 simple steps. Step 1, P ratio less than 20 is a fail as it doesn't have a P ratio. Increasing revenue is also a fail as it went from 200.63 billion to 181.5 billion, so that is a fail. Profit has decreased from 8.38 billion to minus 23.25 billion. Shares outstanding has increased from 4.14 billion to 4.23 billion, so that is a fail. Current assets are not greater than current liabilities, with 50.05 billion to 63.99 billion, fail again. And finally, the free cash flow has not increased as it's gone from 3.92 billion to minus 3.42 billion. So that is 6 fails, 0 passes. Bad news for Exxon. Now to quickly look at my model, I have it at a calculated stock price at around $56, which means it's at a 18% discount. So according to my model, it is a buy. Despite the fact it has 0 out of 6 steps passing, which as I said is a first, I do think Exxon is a buy. I don't think they're going anywhere for the time being. They're a large company. If they can hold out till the end of the pandemic and once things get back to normal, I think they can easily reach that $70 a share. So it's a very good short-term play if you're willing to take a bit of risk, because I do think Exxon can get to their previous price. And as someone who enjoys that dividend, a nice 7% dividend coming is very, very good, and I can definitely use it to purchase more shares of Exxon or shares of companies that I enjoy that are more growth focused. But I do think it is a buy. It is a risky play, but I do think it can get back to its pre-pandemic levels. So that was my summary of Exxon, ticker symbol XOM, using my 6 simple steps. I do think it is a buy, and I hope you do your own due diligence and take a look yourselves. So please leave a like if you've enjoyed the video, give your comment on your thoughts, and please subscribe if you're interested in more investing and stock review videos. I'll see you guys next time.